for our team to launch a new lab cycle each year, and it's inspiring to continue to see the growing interest in the lab and what we're all working to build. So we're excited today to help you refine and target your submissions and answer any questions you might have, ultimately to help ensure this cycle is as impactful as possible and hopefully making all of our lives a little bit easier. So for those of you new to Climate Policy Initiative, or CPI, the lab is one of our flagship programs. CPI is a climate finance specialist institution, and our mission is to assist governments, businesses, and financial institutions in achieving growth while tackling climate change. We're a global organization with offices in Brazil, India, Indonesia, South Africa, the UK, and the US. Thanks again, everyone, for joining us and for your interest in the lab. Let's go ahead and get into today's agenda. So we'll start out by explaining how the lab works and how it specifically helps develop climate finance instruments from idea to pilot. Then my colleague, Morgan Richmond, will walk you through what the lab is looking for in our 2025 cycle, just detailing our regional programs and global thematic streams. And after that, Morgan and I will review a couple of successful applications from previous cycles, and then detail some of the key questions on the submission form. And following these presentations, we'll go ahead and invite all of you to ask questions. You can start typing your questions into the Q&A box at any point during the webinar, and we'll answer them after the presentation. We also had a number of questions submitted in advance that we'll be trying to go through as much as possible. So with that, let me just go ahead and start by introducing you to the lab program. So just for some broad framing here on the challenge that we're all working to address. Climate finance is absolutely crucial in the fight against climate change, as keeping global warming to 1.5 requires significant investment, especially private investment. So another piece of CPI's work is tracking annual climate finance flows. And we found that climate investment exceeded $1 trillion for the first time in 2021, as you can see on the green line. Nearly 1.3 trillion, which is double the amount invested in 2019 and 2020, which is great news. Amazing to see that progress. But as you can see in the yellow area, the graph that indicates the annual climate finance needed by 2030 to prevent the most severe impacts of climate change is at least 5 times higher than current financing levels. This increase in funding clearly will not rely on new sources of finance only, but rather shifting investment from high emission activities into climate friendly businesses, projects, and crucially for our work here today, financial intermediaries and effective financial instruments. So we're not sourcing trillions of dollars in investment solely from governments and philanthropies alone. Private capital is absolutely essential. And that is really why the lab was created in 2014. I think moving on to the next slide. Awesome. With a mission to identify and develop innovative financial mechanisms that can attract private capital into climate mitigation and adaptation, specifically in developing and emerging economies. The idea that we really pursue here is to use blended finance approaches, so small amounts of grants and concessional capital to kickstart operations, and then grow these into self-sustaining vehicles that can channel investment and create impact at scale while achieving commercial viability. So far, we've launched 78 instruments that have included funds, facilities, guarantees, bonds, insurance, and credit products, and more, all of which, though, share this common vision to leverage limited public or concessional capital to unlock private investment at scale. So just a couple of stats on our impact over the years. The Lab Ideas have mobilized over $4 billion since we launched the lab more than 10 years ago. This includes about 1.3 billion invested by our members and observers within the lab network. So we can see the direct lab network is heavily engaged, not only in providing technical support, but also in providing capital for our alumni. And then this funding has unlocked significant co-investment with about 50% of the $4 billion mobilized coming from commercial banks and institutional investors. Over 130 public and private investor institutions have supported 37 lab ideas that have successfully attracted financing. This equals about a 54% capital mobilization rate that we're quite proud of, and we think represents quite a high success rate compared to other commercial incubators and accelerators within and outside of the climate space. So moving on to the next slide, this is really about our theory of change that revolves around the collaboration between the public and private sectors. So we openly source concepts from climate finance innovators, you all that are on this webinar, and then have a powerful network to really move these ideas from concept into funding and action. So the first point here is about public-private collaboration. So we really think strengthening partnerships between the public and private sectors is vital, not just conversation and collaboration, but action and ultimately an agenda that brings these two parties together. This really enhances our collective knowledge and allows us to identify and deploy effective climate finance solutions. Next, the focus on innovation and transformative solutions. So we prioritize ideas that are a clear value add to the local market and have the potential to become financially sustainable and scale. These transformative approaches are designed to address risk and barriers that hinder investment in sustainable development, which we'll be talking quite a bit more about today. And then finally, mobilizing capital. Catalytic finance from our lab members and the broader network is crucial, and this enables us to pilot and implement these transformative solutions and ensure that our ideas don't just remain concepts, but are actually able to move into action effectively. And mobilizing finance is not just about numbers, it's really about turning a vision into impact. So this is a snapshot of our member organization, so the lab's broader network. Our model really relies heavily on our membership, which includes representatives from over 100 governments, investment banks, insurance companies, project developers, and development finance institutions from across the world. Lab members are tasked with selecting ideas and supporting the design and piloting of selected ideas in several ways throughout the lab process, which again, we'll speak to in a bit more detail in a minute. So with that in mind, let me just explain, especially for those of you who may be new, how the lab works in a bit more detail. So first, we have an annual open call for investment solutions, which is of course open right now and why you're all here. We've received hundreds of ideas from a wide range of institutions over the years, including startups, entrepreneurs, boutique fund managers, large public and private institutions, and NGOs. Once the call closes in November, the CPI team will screen the submissions to ensure they meet our criteria. And then we pass the top ideas on to the lab members. The lab members will then vote to select a series of finalists that meet lab criteria, and then we'll detail the criteria in the selection process in a bit. But then the lab members ultimately select from those finalist pools the winning ideas that will pass into the development stage. And during the development stage, the lab secretariat, CPI, and lab members and independent working group members that we bring in form working groups that help to co-develop these ideas over a several-month process. And once this design phase is complete, the lab members then vote to endorse the final instruments, which is sort of a signal of the graduation from the design phase of the program and readiness to move into fundraising and implementation. The focus then shifts to what we call our implementation support phase, which is where we help the endorsed instruments really get off the ground and access funding. This phase is chiefly focused on investor engagement, fundraising support, and any other partnership development or boutique research and analysis that's sort of needed. And it's very customized to the support that each team needs. This lasts for about a year. But once alumni are in our network, we're sort of always striving to provide support on an ongoing basis in any way that we can. One really exciting new development that we're introducing this year is the pre-seed capital facility. So in addition to the acceleration support, all lab ideas in the 2025 cycle will be eligible to apply for conditional grant funding, with a goal to enable faster implementation and greater scalability. These grants will be available after the acceleration process and will involve a dedicated selection process. Teams that are selected will receive between 150 and 250,000 US dollars in conditional grant funding for implementation. We're really excited about this, as it kind of represents the next phase in the evolution of the lab and the support that we're able to provide to our proponents. And this funding will really help to develop prototypes and pilots, while also addressing, crucially, a lack of early stage working capital that is out there. So we're excited to be able to offer this to our 2025 class and hopefully offer it for the foreseeable future. Again, this is not available to institutions that are outside of the lab process. This is a dedicated and embedded pre-seed facility that only endorsed lab instruments, once they've gone through the acceleration process, are eligible to apply for. So yeah, finally, just over to what the lab is looking for. Our website has a bunch more information, including detailed guidelines and an FAQ, and I believe we're posting those into the chat now for reference, but I will go ahead and turn it over to my colleague Morgan to introduce the 2025 lab call for ideas and give you a bit of an overview of what the lab is looking for this year. Over to you, Morgan.
Great, thanks, Ben. Okay, well, with the context in mind of all that's come before, let's take a closer look at the current call for ideas. In 2025, the lab will develop 9 ideas supporting initiatives from all 5 of our regional programs. That's Brazil, India, East and Southern Africa, the Philippines, and Latin America and the Caribbean. And each region will select 1 idea, with the exception of Latin America and the Caribbean, which will choose 2. Additionally, we'll choose 3 ideas for thematic streams that emphasize adaptation, mitigation, and sustainable agriculture and food systems. To make this clearer, because we know that folks have questions about it, the thematic streams will select ideas based on sector rather than region, although they must target regional markets. In contrast, regional ideas will be selected based on their specific region, allowing ideas from any sector focusing on that region. With that, let's dive a bit deeper. First, the regional programs. The lab introduced its first regional program in India in 2015 and gradually expanded to Brazil and to East and Southern Africa. The regional programs have collectively developed 29 solutions over the years, making up about 40% of the lab's portfolio. These regional programs allow the lab to focus on local contexts and priorities, addressing country or region-specific investment needs and barriers. They leverage national networks of highly capable financiers and implementers with deep knowledge of the local markets. And to qualify for these regional programs, your instrument or idea should primarily target one of the markets, regardless of the sector. The Latin America and the Caribbean and the Philippines regional programs are celebrating their 2nd year this year. All regional programs, as I said, will select 1 idea, with the exception of Latin America and the Caribbean program, which will select 2, one for mitigation and the other for adaptation. And then the global themes will also select 1 idea each, totaling 3. These streams focus on sector-specific climate investment needs and barriers. We're talking about solutions that accelerate climate finance for businesses and organizations in the agriculture and food systems sector, innovative financial instruments that support the scale-up of private finance that builds climate resilience and builds adaptive capacity, and then for the climate mitigation theme, scalable solutions in renewable energy, low carbon transport, buildings, industrial sectors, or just energy transition and the phase out of coal and fossil fuels. Eligible ideas should target emerging markets, but not necessarily the same markets as those in the regional programs. Now let me give you a sense of how the ideas are assessed. So lab ideas are selected based on a set of criteria. Ben previewed these. On actionability, we're looking for ideas that demonstrate the involvement of to implement the idea with relevant experience, a clear pathway to implementation that's been envisioned, including a defined time frame, key activities, and project milestones, and the identification and articulation of potential risks to implementation and strategies for dealing with them. This last element that we'll discuss further in a few slides we'll capture with an example question from the questionnaire. Next, for catalytic potential, which we define in the lab context as the ability of an idea to mobilize private sources for climate finance. Ideas should demonstrate the potential for scale-up of private investment in the target markets and the ability to replicate in other markets. Third, innovation. Successful lab ideas will demonstrate how the idea addresses barriers to climate finance that either have not yet been addressed or will be addressed more effectively with the idea than existing approaches in the market. In essence, here we're looking for submissions that clearly articulate how the idea submitted is a value add to other efforts in the space. And then regarding financial sustainability, high quality lab ideas will have a clear strategy for phasing out public and philanthropic financial support over time and to achieving market viability on commercial terms, even if that runway is long in some cases. And they should also identify challenges and risks associated with achieving those objectives and strategies for managing them. Alongside these 4 criteria, we also evaluate whether the idea is a good fit for the lab process itself. We're looking for ideas where the lab has a significant likely value add to the success of the instrument and of the team submitting the idea, the proponent team, and implementing, where the capabilities of the lab team and of the lab's network complement the proposing team's capabilities and needs, and where the team proposing the idea has sufficient time available and a workable governance structure to participate in the lab process. The list on the right captures the lab's core activities and value offerings for reference. This is the same list that's included in the questionnaire to help us understand where the proponent team sees the most significant value adds of the lab. So with that, we'll walk through what makes a successful application and detail some of the key questions on the submission form. In 2025, the lab is introducing a 2-phase application process for the first time. We'll start, as you know, with the call for ideas. We're currently in this phase. Applicants will submit a preliminary application that is due November 7th, 2024. Following the deadline, the lab team will carefully review all applications. Submissions are assessed against the lab criteria and the workstream and region priorities to identify the most suitable ideas. The high-scoring submissions will then be invited to submit a full application by December 12th, 2024. These full proposals will then go through a second round of review and scoring. The lab team will identify a short list of high-quality ideas for each stream and interview proponent representatives as part of the screening process. Regional panel members will then also meet to refine the shortlist, select the 2 ideas from their region to move forward for a final vote by global lab advisors, and lab advisors will refine the thematic focused shortlisted ideas, which will then be passed directly to the finalist round. Global lab advisors will then meet for a final selection meeting to vote on all finalist ideas and select the instruments that will move forward in the lab process in late February. The regional panel pre-selection meetings are tentatively scheduled for early February of 2025. So with that context in mind of the process, to illustrate the evaluation of ideas submitted in practice, we'll share a couple of examples of past lab instruments that were selected and successfully went through the lab process to endorsement. First, let's take a look at the Green Guarantee Company's application from the lab's 2022 cycle. The instrument, as context, is the first specialist guarantor for emerging market climate adaptation and mitigation projects, unlocking access to global investors by de-risking green bonds and loans. GGC was notable in its application stage for its highly actionable approach, was backed by the proponent's proven track record in early partnerships with global banks like Deutsche Bank and Standard Chartered, which were essential for success. The application demonstrated strong catalytic potential, showing that GGC could be used to finance innovative green technologies that are too risky for traditional investors, aiding in the transition of carbon-intensive industries like energy and transport. And the business model was clearly adaptable to emerging markets, offering significant growth opportunities. It was notable for its innovative design. The submission articulated that an affordable, off-the-shelf guarantee instrument could unlock access to vast international pools of debt capital for borrowers with hard currency revenues. The instrument was particularly beneficial for the debut green bond issuers or for novel financial structures with which investors are less familiar. And then finally, the submission showed that it was financially sustainable. They demonstrated confidence that commercial returns would be generated within the first 5 to 10 years of operation, enabling ultimately a transition to private investment. A second example, let's discuss Catalyst Fund, which applied in the 9th cycle of the lab in 2023. Catalyst Fund is a leading impact fund and accelerator supporting pre-seed tech startups building a climate resilient future in Africa. The Catalyst Fund application stood out to us for being actionable through its proven track record and investment model. There's a full in-house team that came into the lab with a significant network in place and initial funding already on the books. The application demonstrated catalytic potential through its highly replicable model across geographies, and indeed, the team already had replicated somewhat substantially across Africa. The innovative properties of the instrument stood out to us with its unique targeting of pre-seed to Series A stage adaptation solutions. And then with expectations of profitability at scale and higher leverage, the instrument showed significant potential for future financial sustainability, which was compelling. So with that, back over to Ben for some guidance on a number of the key questions in the application.
Excellent. Well, thank you so much, Morgan, for that helpful presentation. So just zooming in a bit on the application itself, I'll now go ahead and walk you through 4 examples of what we're looking for. Well, actually splitting that with Morgan. So the lab's preliminary application is really designed to focus on questions related to our core lab criteria. There's one dedicated question for each of the following: innovation, actionability, catalytic potential, and financial sustainability. Applicants have up to 200 words to answer each of these questions, so it's important to be clear and concise in your responses. So here are just a few tips to help you with the application process. First, review the lab guidelines and the FAQ, which I think Sam or Julio popped into the chat earlier in the webinar. Those are really meant to help you and kind of serve as your North Star as you're thinking about developing your application. Secondly, and perhaps even more importantly, take a look at the lab's portfolio of instruments. They're all available on our website. We have the sort of takeaways from the full suite of work that we completed during the lab process. So the instrument 2-pagers and the full reports on there, as well as a quick description of what each of those instruments are. This will really allow you to see how past successful ideas have articulated their approach to the lab criteria, and it's just a great way to get a sense of what the lab is looking for. So first, let's talk about the question on the form on innovation. This question asks you to briefly describe the existing barriers that prevent private finance from flowing into your target sector or geography. Then you'll need to explain how your idea overcomes these barriers. And finally, you should touch on how your approach is different from or improves upon existing initiatives. So here's how to kind of structure your answer. So first of all, identify the barriers. Start by really clearly stating the primary barrier that's hampering private investment within the sort of sector as a whole, and specifically within the subcontext geographically or sectorally that you're focusing on. Then present your solution. Explain how your idea addresses this identified barrier, and be specific. Detail the unique aspects of your instrument that make it effective. Third, highlight the impact. So discuss how your idea will lead to increased private investment in the sector or region. Show us the potential impact your solution could have on unlocking finance. Obviously, be brief. It's 200 words, but try to provide as much backup and sort of numbers and objective frameworks and reference points as possible. So next, let's move on to the second question on actionability. This question asks you to briefly describe your ability to implement the idea and specifically about your connection to the target country or region and how the proposed financial instrument fits into your operations. You should also address whether your organization will be the one dispersing capital or if another entity will take on that role. This is so crucial. Our most successful ideas have pretty much always been led by teams with a significant presence on the ground, whether they're fully locally based or they have very close partner organizations or a subsidiary or a part of their team that sort of form as the boots on the ground, working with stakeholders that understand the local capital markets, the local market context, the local barriers, how to work with communities and stakeholders. This is such an important aspect of what makes a high quality submission versus one that's lower quality. So here's just some suggestions of how to structure your answer there. So first, introduce your team. We don't know you, so just introduce your team to us, who you are, your experience, your expertise, your vision, and the connections that you have in the target country or region. This will really demonstrate your capacity to engage effectively with investors, both local and international, as well as local partners, stakeholders, and beneficiaries. And then explain your role. Clearly outline what your institution's role is in implementing the idea, what tasks will your team handle, and where might there be gaps in your experience that could be filled through partnerships. And please explain what those partnerships or collaborations you have in place are. You'll need to identify the implementing entity, whether it's you or a partner institution. If your institution won't be the one dispersing capital directly, make sure to specify which entity will be responsible for this. In all of these, we want to understand simply how this works. Where is the origin? Where is the endpoint? Who are the beneficiaries? How is capital flowing? How are investors getting paid? How are stakeholders and beneficiaries getting served? So please loop that in throughout, and then what your team is doing specifically within that. Outline the implementation pathway, a brief overview of the key steps necessary to bring this up to life, the timeline, major milestones, and resources required for implementation. And then also address the challenges. We're acknowledging these are early stage vehicles. There will be challenges. If you're ready to go out and raise $100 million tomorrow and have everything in place to do that, this probably isn't the right fit for you. We're looking for teams that are at that kind of sweet spot of having a very strong vision and a well-articulated proposal, but also need some support. So be sure to list the challenges that stand in the way, and then also how you're thinking about addressing these challenges and the support that you need. So I'll go ahead and turn it back over to Morgan now to walk through the last two questions.
Great, thanks, Ben. Okay, moving on to a question on catalytic potential. This question asks you to detail how your idea can scale up private investment in the target market and then be replicated in other markets. Structuring your answer in target market potential, I'll highlight that this is an opportunity for you to talk about pipeline and they envisioned the what of the investment. Not the only opportunity for it, but we're really looking for that throughout the application. And here is yet another opportunity to make that very clear. In this context, begin by describing the size and growth potential of your target market and highlight any specific characteristics that make the market a strong fit for your idea. Then think about scalability. Identify the key factors that will enable your idea to scale, such as existing demand, supportive infrastructure, favorable regulatory or other enabling conditions, and make it clear why your idea has the potential to grow beyond its initial pilot scope. And then discuss the potential for replicating your idea in other markets. What other markets mean can depend on the instrument, but consider the role of regulatory frameworks, economic conditions, and any similarities with your target market that might make it easier to expand. And then finally, on financial sustainability, let's dive into a question in this space, specifically focusing on your idea's path to becoming commercially viable. This question asks you to explain your envisioned journey that the instrument would take to reach commercial viability. You'll also need to touch on whether and why your idea might require public and philanthropic finance, and how it ultimately plans to attract private finance, such as through de-risking mechanisms. Here's how we suggest to structure your answer. On market validation, start by explaining how you envision or how you have begun to test and validate your idea in the market. This could involve pilot projects, market research, and any other approach that would help demonstrate the feasibility of your solution or approach. And then on revenue generation, describe your revenue model. This links back to pipeline. Clearly outline how your product or service will generate income, what your plan is for building a sustainable business model around it. On public financing, if your instrument requires public or philanthropic funding, and many successful instruments that have come through that process do, break it down into these 3 points. Specific type of public funding needed for your project, the role of public funding in helping your idea move towards commercialization, especially the role in de-risking, and the plan for phasing out public funding and transitioning to private financing as the solution gains traction. And then finally, attracting private finance, discuss the mechanisms or strategies that you'll use to attract private investors. This might include the de-risking mechanisms that you may begin to capture the public financing piece of the response, showcasing strong financial returns, or any other incentives that will make your idea attractive to private capital. With that, I will pass back to Ben, and we'll look forward to the Q&A.
Thanks, Morgan. Yeah, so I think at this point we can move on to the most exciting part of the webinar. You've all listened to us speaking for the last 30 minutes or so. So we're excited to hear from you and answer some of your questions. We've already had a number of questions come in, but feel free to continue writing those. Just pausing for a minute to go through a couple of these. There was one that I already answered, but I think is worth spending a little bit of time on. And that was around, it was one of the questions around the pre-seed capital facility, and specifically what activities would be eligible to be funded under the pre-seed capital fund. So yeah, again, proponent teams will be working with the Secretariat team to develop a budget and sort of detail activities and needs. And these are really going to be different depending on the team, the instrument type, and the stage and the needs. So this will certainly be a collaborative process that we'll work with proponent teams on. But some of the eligible activities would be either staff or consultant salaries or fees. Travel, legal support or legal consulting, or early stage pilot activities. This funding is really meant to be quite flexible, but it is meant to support OpEx, not CapEx. So operational expenditures, not sort of capital expenditures within the capital stack. This is meant to support the proponent team, not be embedded into a fund as first loss or risk capital. That's the one thing that this is certainly not meant to do. This is meant to carry teams forward and enable them to get to the point where they're raising those pieces of capital from other concessional or commercial financiers, and ultimately to lead towards a pilot or a first close. So that's an initial question. I think there was one question around like prioritization among the regions in this year's cycle, and then also if there was like more of a focus this year on private capital mobilization. Maybe I'll kick that one over to you, Morgan, to speak to in a little bit more detail, since you went through the sort of what we're looking for this year.
Sure, happy to. I'm on the private capital mobilization question first. I would say same amount of focus as in prior years. Always an emphasis of the criteria, paired with understanding that, as we hopefully conveyed in the presentation, we understand that most or really nearly all of the instruments that come through the lab process initially require some level of public concessional capital. And so, yes, there's an emphasis on ultimately private capital raising, but with different time horizons of instruments. And so just to say the same level of emphasis as in prior years. On the regional question, same emphasis of regions as last year. Across those, we're really looking for instruments across all 5 of the regional programs. We're excited about the 2 newest programs, of course, Latin America and the Caribbean and the Philippines, but also about the great success and track record of the other programs, East and Southern Africa, India, and Brazil over many years. One related question for the regional program, this is from Avi, should we have the local network as part of the submission already at the application stage? Great if you have a local network, great if you can articulate connections to local partners, to local pipeline, an articulated, very structured local network is not a definitive necessity. I think it really varies depending on the context of the instrument. And then sort of shifting gears, but while I'm off mute, I'll go answer one other question, which was from Sharon about the very first question about the support that teams receive. Did the teams receive support from lab staff and lab partner members who are interested? What's the time commitment? Great question. The answer is that the teams receive dedicated support from a team, from a sort of central team of analysts from the lab for the phases 2 and 3 core implementation support, and then after endorsement as well. That support is dedicated. That team is committed to just the idea that has been selected, and then the instrument also receives support from the broader lab team of experts in communications and financial modeling, gender and adaptation, and from the lab partner members who are interested and engaged and who really are engaged in these instruments from the beginning, from seeing the ideas at the application stage all the way through. And that's who forms, along with the outside experts, the working groups and the advisors who see these ideas progress. So that's an answer to those. Many more that I see there in the Q&A, but Ben, back to you.
Yeah, thanks, Morgan. Lots of great questions coming through. Yeah, just some quick ones. One, whether there'll be financial support provided to teams during the accelerator period. So that would be during the first year. It will not. Teams need to be able to self-fund through this period, and have basically a team of dedicated staff members that will dedicate time to this. Our estimate on that is usually a minimum of 2 to 3 days per week for at least one person. Ideally, I think in the most successful cases, we'll have a team of 2 to 3 contacts in an institution that will be dedicating somewhere between 1 to 3 days a week of their time to the lab process. So yeah, it is certainly an intensive process, and I think teams get out what they put in. But they're receiving around $250,000 US in pro bono time, at least, between CPI, our pro bono legal firms that provide support, and then also through the working group and the members. So yeah, hopefully that is clear. Another quick question from Zachary. This is a good one. As an NGO, our idea is to partner or recruit a fund manager as a next step. Is this seen negatively? No, it is not. We've had numerous entities, especially many of our NGO or sort of impact-oriented or implementation-oriented partners that don't have a sort of capital management and capital deployment piece as their primary value add. We've had many instances where they have come into the lab program without a fund manager. And one of the things that we will often work with them on is selecting a fund manager. We actually have a couple of just endorsed instruments that are in the process of looking for and recruiting a fund manager right now that we're working with them on. So it is not seen negatively. I think what needs to be clear there is what the vision and value add and ultimately value of the team is from the proposing agency or institution. There needs to be a sort of clear value add and market connection, regardless of whether you'll be the one deploying capital or not. Another good question on IP rights. This is I think something that always comes up. So one of the first things that we will do as the CPI team is sign a two-way non-disclosure agreement and MOU with the proponent teams. So on the CPI side, we are not a commercial entity. We're a nonprofit, mission-driven institution that is here ultimately to support the success of blended finance practitioners and innovators that are looking to raise capital in the space. So we have a very close relationship, and there needs to be a pretty open framework in terms of sharing IP on both sides between those two entities. But we're very careful not to share any commercially sensitive information with the wider working group or lab membership. The basic design and structure of the instrument has to be there. If this relates with software solutions, this is not a tech-based incubator. We have certainly had successful teams that have had software or a fintech solution as an aspect of what they're doing, but the innovation and the focus of our support is on designing and raising a capital solution to bring that to market and ultimately to mobilize climate investment. So when it comes to the IP around a software or a hardware solution that might be proprietary, that tends to be less of a concern because we aren't digging into the details of that. So hopefully that answers that question, and is also a nice way to give a little bit more context on how we treat IP and IP sensitivity within the lab program. So it's a fairly open relationship between CPI and the proponent, but we're very careful about sharing anything that could be commercially sensitive outside of those two entities. Another question, maybe Morgan, if you want to actually talk to the question about pay by results, or sort of the way that we couch or draw the barriers around blended finance versus other mechanisms.
Yeah, happy to. It's a good question. The instrument that comes to mind for me to give you an example and then can talk about the sort of broader answer is in 2019, Cooling as a Service was an instrument that came through the lab process and was from the Basel Agency for Sustainable Energy. And I think it fits in some ways into this gray area between, in the sense that it was a servitization mechanism for clean cooling, close to or akin to a pay for results mechanism, but critically to being selected, part of the core support from the lab was on the recapitalization structure of the servitization mechanism. So working with the team on thinking through, for the financiers of the servitization, what would be the special purpose vehicle used, or a sale leaseback model if the commercial bank was the holder of the asset. And so in that way, there was sort of sufficient value add, right? That we were thinking through the back end finance mechanism or instrument and the layers of concessional and private capital involved. So I think that is I think that's sort of the answer to this question, is a mechanism that includes, or an instrument that includes, a pay for results mechanism, very welcome. And having an element of envisioned cash flows and a structure that involves whether it is debt or equity or guarantees or a sort of a draw in of capital is also critical. So that's what I would say to that one. Maybe two others. Will the lab help in investor outreach? Yes, hopefully we sort of got to that answer during the presentation. yes, a big focus of support during the 7 months of core development and after. And that is what we see as hopefully a substantial value add. And then to Tifan's question about a consortium, you are welcome to apply as a climate fintech with a use case and with use case partners. We have had lots of successful applicants that have come through the process that are an institution on their own. We also have had lots of successful instruments that are a consortium or a team. I think actually, if you are a consortium, articulating clearly the governance structure and the decision making across the consortium then becomes critical. So sort of the weight of the two approaches. But if you are applying as an individual institution, exactly as you say in your question, capturing the use case and especially the envisioned partners and any initial conversations that you've had with those partners or partnership that you already have underway is quite valuable to helping us understand where you are in the implementation process. To that same end, there was a question about, there are a couple actually questions about stage of application, the level of advancement that's required for an idea to be proposed. Does it make sense to present a preliminary idea? That was from Diego. From Luis, have we backed early stage ideas that were just concepts at the time of application? And two notes. One, I will say that in the guidance documents on the lab website, we have and actually in the application itself, we should have a list of stages and a capture of how we think about those stages and indicate the stages that usually see the most success. To answer the question directly, we have had ideas come through the lab that were relatively early stage, that were, more or less concepts at the time of application. But I would say the ones that succeed are really clear about the work that they have done before and the track record of the team. So if the team that is applying with the idea has collectively or in individual elements implemented a different fund or a facility or has a track record of this kind of implementation, that is compelling. If you have done the initial work on the concept, if it is still just a concept, of engaging with partners, of thinking through, of sort of putting the legwork behind the instrument. We want to see teams that are committed to these ideas, that have already thought them through in some way and have skin in the game. That's, I think, the sort of baseline level of stage. Yeah, with those, back to you, Ben.
Thanks, Morgan. Great answers and great questions. Yeah, one question came through from Ben Cohen about the experience of pro bono legal firms and what their support looks like. Again, the support's going to look different for every instrument depending on the sort of regulatory barriers that they might be facing and the structuring needs. Generally, we have had very positive interactions with our pro bono legal firms. We have a few national firms working in some of our regional labs, and then globally, we have firms like DLA Piper and Oric and McDermott Will and Emery that are providing support. These are some of the largest legal firms in the world and have teams that have worked on every type of financial mechanism imaginable, and they usually tend to put very strong teams together who are usually really excited to work on such an impactful initiative and something that's interesting and complex from a structured finance perspective as well. So generally, we try to get teams with very strong local market expertise, whether that's coming from a global firm or one that is quite local. And yeah, again, that varies depending on the different countries and regional windows. And we found that even in cases where we're not able to identify legal support that is specifically tailored to a certain market, if that market is very small, there still tends to be a lot of useful things that they're able to provide in the sort of contracting and structuring. So hopefully that is helpful there. Yeah, just looking at Sumit's question, working on an initial concept and working with a global sectoral business association, considering a stake by putting some of their time and money in, and they would later like to host the facility for its members and hire a fund manager. I mean, I think this potentially looks interesting as long as there's sort of a clear need for design support and technical assistance from the lab and its members in terms of developing this facility. Again, it's hard to say without fully reading the application, but yes, that sounds potentially quite feasible and eligible. I think the questions that come up when it's a very large consortia is making sure that the governance and the decision making is clear in your application, because that can of course become a challenge when you're working with a large multi-stakeholder organization. So would encourage that for any application that might come through. Maybe so. This was a good question from Lee Wei. Morgan, I think I see you're already sort of typing an answer to this, but yeah, I mean, we sort of glossed over this in the presentation, but in terms of the type of support that the lab provides for selected ideas. So the support that's provided from CPI staff members is we usually have two full-time or close to full-time people working as kind of an extension of your team ultimately. So most of our proponent teams and CPI teams meet once or twice a week to talk through deliverables and support the working group, the way that we engage those participants. So this is usually somewhere between 12 and 20 individuals and institutions that are drawn from the proponents network, from the lab membership, and then, in some cases it might be legal support, regulatory support, partners or implementation bodies. Again, that would be drawn from a mix of CPI and the lab network and then the proponents network, all with the goal of kind of pushing through and working to execute on deliverables during this very short and intensive process. Those meetings are usually once every 6 weeks or so with a full group. But then we encourage teams to have individual interviews, usually twice during the lab cycle with each member, because what we found is sometimes the working group members are able to be a little bit more transparent and helpful when it's on a one-by-one basis. So yeah, I mean that's kind of the frequency of the meetings. In terms of how we're sort of stress testing, the first thing we're doing is we're looking at the potential design of the vehicle and then doing a kind of landscape analysis of similar funds and blended finance instruments that have been launched into the market. Where have they been successful? Where have they struggled? How could this be well designed to take into account what level of concessionality might be needed, what the pathway to market might look like, and kind of taking it from here's the concept as it's proposed. This was a good concept. Obviously, it made it in, but let's kind of break this down and then sort of rebuild it from the ground up. The second phase of the lab is really around detailed financial modeling, impact modeling, developing an impact thesis, looking at different scenario analyses, understanding what the ROI would look like for different classes of investors. And again, just working on making sure we get that right, putting together any partnerships needed, looking at kind of growth expectations on the ground, analyzing pipeline, on a sort of project or sub-project level basis, looking at the target market analysis. These are just a few of the activities that we do throughout the year, and we can provide a whole list of everything, and you can sort of see that as it's been customized to the support needed for each instrument if you go onto our website and kind of look through examples there. But yeah, great question. Yeah, I don't know. Morgan, are there any other ones that are coming up that you want to speak to? I think we're pretty much mostly through the questions.
Yeah, we've made good progress. Thanks all for the questions that you've submitted. The question from Shruti is the only one that I see that maybe hasn't had an answer yet, at least directly. Launch a pilot in the Indian market, requiring support for research and pain points from other markets. Yes, potentially applicable. Certainly, if it is a climate finance instrument focused on climate relevant solutions and pipeline, and where you're thinking about a shift to the instrument model or to the business model of interest, I would flag that a company alone, if the framing is sort of simply a company and not an instrument, perhaps not a fit. But if it is a climate financing pilot that is an instrument with a financing structure and envisioned cash flows, revenue, etc., then yes, certainly it could be a fit. And part of, as Ben mentioned in the broader summary of support, part of what we think about for all instruments is research about pain points for other markets and capturing different pieces of a business model for replicability. So yes, potentially, definitely we would welcome a preliminary application.
Great, thanks, Morgan. I think one maybe final one that I see in there is how important is it that the proposed instrument becomes financially self-sustaining in the short to medium term? Great question. Listen, runways look really different, and this varies a lot by sector and by region. Many of our sustainable agriculture or nature-based solutions programs and instruments are going to have a longer runway to commercial viability than, say, something that is in infra or in energy. That's well understood. I think what we like to see is a pathway of scaling up the leverage of commercial funding over time. I mean, there are some structures that do require a kind of recycling of catalytic capital over time, or in some cases, a continued infusion of catalytic capital in different fund iterations. But what we are looking for is efficiency of use in catalytic capital, whether that's donor or philanthropic or concessional DFI money. And then a sort of building of commercial leverage over time. So it varies, but the shorter that runway is and the more clear it is, the better. But obviously acknowledging the fact that some sectors, including agriculture, for instance, the example that we often use is even agriculture in developed markets like Europe and the US have huge government subsidies to allow them to be commercially sustainable. So, that we take that into consideration when we're looking at some more challenging sectors. And with that, I think we have worked through all 38 of those fantastic questions. So thank you for your engagement. And we are at time. So yeah, please do take a moment to answer the poll that has come up on your screen. I think if it's coming up, just to evaluate the webinar, and yeah, thanks so much for your interest and questions. We are really looking forward to seeing all of your submissions this year. If you have a question that did not get answered, please go ahead and send an email to lab.cpi@cpiglobal.org. And the recorded webinar will be available soon. We'll be following up via email with that and additional reminders. So thanks again for your time, and hope to speak to you all soon.